Really? How did she have a $200,000 capital gain? Well, then they said, oh, whoops. It was a $20,000 capital gain. I was a hero to that lady. It's the same kind of sense. This is an accounting example, not so much a tax example. I was asked to go along on an audit of a waste disposal company. And I didn't know anything about waste disposal. I didn't look at detail. They just let me look at numbers. And I looked at numbers. The company was 5 years old, and it already had an accrued tax liability of $4 million. A little company. You know what they'd forgotten to do? They'd forgotten to reverse that every year. So instead of having 1 year's entries, they had 5 years entries because they had never cleaned it up. Change is important. I think you're going to find, hopefully, some of you will at least, that by the time I finish 6 hours, you're going to say, oh my gosh, what is artificial intelligence going to do to tax planning? Now, I'm sure there are a lot of skeptics in here and online who think AI could possibly have anything to do with taxes. I'm going to challenge you on that. And I'm going to challenge you hard. This is going to be, I always use sports analogies, I apologize. This is going to be a Nolan Ryan fastball coming in at 103 miles an hour with some of these examples. But the point here is that by combining just these 6 tax techniques, very common people can save taxes. As a matter of fact, even Ben found this a startling statement, but here's my daring challenge to you. The first 4 months of next year, I'm going to do 1 2-hour webinar each month, and it's going to be a case study. And it's going to take a common person. And I'm going to show you how to save them $10,000, $20,000, $30,000 in taxes on a very modest set of circumstances. Maybe their ordinary income's $40,000, and they have $40,000 or $50,000 of Social Security, and they have a $20,000 or $30,000 capital gain. I'm going to show you how to save that person $20,000. And I'm going to come up with 20 of those examples because I want to focus on each of the 6 tax saving techniques. And in every case, minimum tax savings will be $10,000. Now, this is Roger with his limited cognitive ability. Think what could happen if we had a computer and AI could take that same person and just probably in a few seconds generate a tax plan for that person. It's going to happen. Now, fortunately, I'm in my 70s because I'm going to be obsolete in a few years. What I'm really good at, a computer is going to be able to do. Back 30 and 40 years ago, is it okay? 30 and 40 years ago, you remember when everybody was lamenting that computers were taking jobs away from office staffs. That where they had 30 or 40 staff members, I remember this really well, back 40 years ago when I was at Ernst & Whitney, that everybody was lamenting that offices that had 20 personnel were going down to 3 because of personal computers and laptop computers. And hardware computers sitting on desks. That same kind of thing is going to happen to those of us who might make our living doing tax planning for individuals. But lest you think that tax planning is for millionaires only, most of what I'm going to do today, most of what I will do in those first 4 months of next year in my 2-hour webinars is going to show you how common people are going to save a lot of money on taxes. And there are lots and lots of things that the press is telling us, that newscasters are telling us, that I'm going to prove to you are not true. For example, no tax on Social Security. Well, that's a little white lie. It is true that under the new law, that they estimate 88% of the people will pay no taxes on Social Security, but some people are still going to pay taxes on Social Security. Now, what I want you to understand is that there's a huge difference between total tax avoidance and tax deferral. Tax deferral just means you pay the taxes later, right? And that's very powerful. I made my reputation for years talking about tax deferral. But with this new law, it gives me the opportunity to talk a lot about tax avoidance. Avoidance with Social Security, avoidance with capital gains, avoidance with sale of principal residence. And until you run into a situation, sometimes you don't recognize it. I have a family member, unfortunately, who probably is going to die in the next 2 weeks. And everybody's in town this week to say goodbye to that man. Well, he and his wife have a house that is worth a lot of money. That's the major asset. They have a house that's worth a lot of money. So much money that even stepped up basis is not going to eliminate the taxes. Who knows if we'll have stepped up basis in the future. But the other problem is, what if she decides, his widow decides she wants to live in it for a while? How long can she live in it before she loses his personal exemption on sale of residence? There's so many things like that. So that's what I'm going to do in this first 6 hours. I will follow that up, as I said, then with webinars in the first 4 months of the year. Why 4? Because that's when individual tax returns are due, isn't it? And you have a lot of people who want their taxes done by April 15th. They get mad. Well, years ago, I had a new partner, and she was extremely sensitive to clients complaining because their tax professional was hard to get in touch with. And I said, well, now think about it this way. If April 1st, it is easy to get a hold of your tax professional, they aren't worth a damn. If it's easy to get in touch with them April 1st, they're probably not very good, are they? Because if they were really good, what would be happening between April 1st and April 15th? what happens to Ben Tallman all the time. He doesn't sleep much from April 1st to April 15th. If you could get, I've learned patience over the years, lived for years with a lady who had no patience, which is a terrible thing. She thought I had too much patience. Called me granny when I was driving because I wouldn't turn in front of somebody for fear that they would run me over. If you need patience with a tax professional between April 1st and April 15th, chances are they're pretty damn good. And those of you who know me know that's the only cuss word I ever use, if you consider that to be a cuss word. All right, so let's start with the first slide. Jam, can you give me my first slide on magic? Yeah. All right, this is going to be called Magic Tax Planning. And category 1 is the potential for no tax. Now, unfortunately, we've sold it as no tax, but it's not no tax. It is no tax, they estimate, for 88% of taxpayers. It is the tax based on combined income. That's the new term they're using. Historically, we used the term provisional income for taxing Social Security. Provisional income is adjusted gross income plus non-taxable interest plus, and I called it appropriate portion of Social Security. If your income's low enough, what's the appropriate portion of Social Security? 0. Now, and for those of you who are looking online, I have people in my audience that I feel comfortable picking on. So I'm going to start with you, Vic. Is it inappropriate to try to make Social Security have no provisional income? There are some people who think it is, that we have an obligation to pay taxes. Well, Judge Learned Hand said no. One of the people in the audience showed me a quote from Arthur Godfrey. Said, I'm happy to pay taxes, but I'm even happier to pay half the taxes. Yes. That's what I think artificial intelligence can be programmed to do. And I think one of the secrets I've learned over the years in teaching is not only to poke fun at myself, but poke fun at Ben and poke fun at some of the people in the audience. So I have to tell a story poking fun on me. More than 50 years ago, I'm not going to tell you how many more, but quite a few more. I was in 9th grade in Middle Nebraska. It was my first year in that particular school. And in that particular school, we started every day by going to our homerooms. And my homeroom teacher was a lady who never married. Notice how I'm trying to be politically correct. A lady who never married, and she was probably 60 at the time. And she was an algebra teacher. Well, there are many, many things. Those people who've worked for me, those people who've lived for me, my children, etc., will tell you I have a lot of flaws. One thing, though, that I'm good at is algebra. For some reason, problem solving with numbers, putting a solution together is what I'm best at. So one day I'm in school, and you have to remember You have to remember that I was pretty new to this school, so I couldn't figure out what was going on. All day long, one day, people kept coming up to me and saying, "Are you in?" Her name was Miss Zelke. "Are you in Zelke's home run?" And I said, "Yeah." "How did you know that?" They would say, "I thought it was you." It wasn't until at the end of the day, we had a special thing where we had to go to our own rooms at the end of the day, that I found out what had happened. We'd had to take the national algebra exam. Somehow, I missed one, which turned out to be, there was one person who missed none, but it turned out I was number 2 in the country. Algebra is something that comes easy, but artificial intelligence could put me out of business because artificial intelligence is going to take what I'm going to try to show you in the first 6 hours here, and it's going to allow people to put client information in and get a way to pay virtually or no tax.
I respectfully disagree.
Well, I'm going to prove it in 6 hours.
I just think, Roger, there'll always be a need for that human touch. 2 reasons. One would be accountability. The other would be strategy. And I believe people will always want to have someone else they can hold accountable. If they use AI to do their own tax return.
Oh, I didn't say that. What I'm saying is, and now I'm going to pick on you, Karen. Karen's got a client, and it's a pretty routine client. 40,000 of ordinary income, 40,000 of Social Security, 20,000 of capital gain. That's not a rich person, is it? But just think of what can be done. First place, if you think about tax stacking, I'm going to answer. If this were a trivia contest, I'd put some pretty hard questions to you. One of them would be, if you have a standard deduction, which does it apply against first? Ordinary income, capital gains, Social Security. Which does it apply against first? It applies against ordinary income first. Well, if you take the ordinary income down, magic happens. If you take the ordinary income down, it's probably going to make Social Security either zero tax or less tax. You take the ordinary income down, it's going to make that capital gain, some of it, be zero tax. If you take that ordinary income down, magic happens. Well, that's only one of the techniques. That's just charitable deduction. So the opportunities, I would say it this way, Ben. I would say Karen's still going to need to know this is that we need to put artificial intelligence to work on. So in that sense, she has to be somewhat of a strategist. But after she figures out this is what we need to apply it to, then the artificial intelligence can do the math and figure the optimal combination. Because I think I'm really good at figuring out strategies, but I have to work at it. It might take me a day to figure out the strategy for that person. It might take artificial intelligence 10 minutes at the most to figure out the appropriate strategy for that person. That's where I think what we're starting off with this seminar is so incredibly important. I've never been accused of being terribly efficient or neat when I get up here and talk either. I'm thinking about talking, which is why you maybe don't want to drive next to me on the highways. Chances are somebody's calling me, or I'm thinking, and maybe I'm not quite as attentive. Maybe I'm not quite as attentive as I should be to my driving. Now, what I hope to convince you, though, is never has it been possible, as it is in 2025, to achieve the magic tax savings that we can save this year. We have potential for zero tax on Social Security. We have the potential for zero tax on capital gains. We have the potential for zero tax due to using reverse mortgages to provide cash flow once you're old enough. 62 is old enough. And let me tell you, Friday afternoon, we conclude with a bang. We have Mr. Reverse Mortgage in the country. Dan Holtquist is going to be providing the last hour of continuing education. Those who've been before know that Dan is absolutely incredible, and his reputation, he's a youngster by comparison to Ben and I. Dan's only in his mid-50s. But Dan is known in his industry as far and away number one in reverse mortgages. People pay $1,000 to come hear him for 2 days. He's had as many as 1,000 people pay in an enormous auditorium to hear Dan talk on reverse mortgages. You're going to be lucky because he's a personal friend of Ben and I's. I will have him on the webinars at some point too, because he's just pure genius in the area of reverse mortgages. His books have sold 5 times as much as anybody else. He has programs now. He's developed programs that people like Amazon and people like that beg him to sell them, his programs on reverse mortgages and the best way to use reverse mortgages. Do not discount reverse mortgages. Reverse mortgages are right in that same area with Roth IRAs. They are magic that less than 25% of the people take advantage of. And there are probably even some of you in here who, despite having heard me for years, think the only way you could get a Roth IRA is to contribute a Roth IRA. Not true. You can do a Roth conversion. It's much more powerful than a Roth contribution. And now you're starting to see pretty common financial planning magazines say that once you reach the appropriate age, you should be doing Roth conversions every year. Every year, especially those people who have big, big retirement balances. So that's my opening salvo. We are going to have 3 groups. You will see on your slide presentations that at the bottom we told you who's sponsoring these books, etc. Oh, and let me talk about the book. talked to Ben and said, Ben, we can't use the books we've used in the past. And Ben quickly figured out with me that we couldn't use the books we used in the past. Why not? Because the year's 2025. When did the big, beautiful tax bill get passed? It got passed in July of this year. Did we have any idea what was going to be in it in February and March? Absolutely not. Even the president's people didn't know what was going to be in it in 2025. They said he campaigned on zero taxes on Social Security. Well, we didn't quite get that. And we didn't get it in the fashion that he might have envisioned it. But we got no tax on 88% of the people. If you use the technique that I'm going to suggest, maybe we can knock that up to 95% of the people that don't pay tax on Social Security. No tax on Social Security is a big thing. With that person that I was just talking about, who has 40,000 of Social Security, 40,000 of ordinary income, and 20,000 of capital gain, that means their provisional income is 100,000. That means all 40,000 of their Social Security is subject to inclusion. Notice I didn't say is included. I said is subject to inclusion. Ben? Reg, yeah. Okay, 40,000 subject of Social Security subject to inclusion. That means $20,000, Alan, is subject to taxation. Even at the modest rates, that's a few $1,000s that I'm going to show you that failing to plan might be taking $100 bills at Thanksgiving and with your fireplace going, at least here in Georgia, with your fireplace going, throwing a $100 bill in every 20 minutes. To me, that's total waste. I'm with Learned Hand. I don't want a taxpayer to pay tax on Social Security unless they have to. And if we were able to eliminate enough, we could even maybe not pay any tax on capital gains, which would be a real boon. No tax on Social Security, no tax on gains. I think you should hopefully be starting to see how in the first 4 months of next year, I'm going to be able to give you 20 examples with common people, how they can save $10,000 or more in taxes. To me, that's what, let's see. I'm going to pick on you, William. That's what your clients think you're doing when you prepare their taxes. They don't think you're a historian. They think you're their advisor. For the last 50 years, I've watched the Wall Street Journal every so often does a study. And they ask, who is your primary advisor? I will tell you, bankers are number 2. So who's number 1? They're tax professional. Now, the people listening online, the people in this room, you get a free pass. I'm not talking about you. But I would guess, and people have disputed my number. Typically, they dispute my number by saying you were too low. I say 90% of the tax professionals do virtually no planning for their clients. I think Ben would say I'm low. It's way more than 90%. It's probably closer to 97, 98, 99% of tax professionals that do no planning for their clients. And Again, I'm exempting those in the room and those online. But I would say fire that person if they're not helping you pay less tax. Because the opportunity has never been greater than it is in 2025. With Social Security, one of the things we're going to learn, both in my sections and in Ben's sections, is there's a new senior deduction. The senior deduction is $6,000 per individual, $12,000 for a couple filing jointly. There's a new senior deduction, and it stacks on top of the standard deduction or on top of itemized deductions, either one. So there's no way that a senior can lose that deduction, is there? Because they get it either way. That's how they helped get to the point where 88% of the people don't pay taxes on Social Security. But the people who make a lot of money, especially the people who make a lot of money and do no planning, are going to pay some tax on Social Security. And common people, Rich, are going to pay tax on Social Security because they're sloppy or because they don't get help. And that's why my point about planning is important, recognizing opportunity is important, and eventually AI is going to be important, Bobby. Eventually AI is going to be important. For example, with this family member, I got to be careful because I don't want to get in trouble within the family. This family member, they have been what I refer to as house poor in recent years. In other words, they both have Social Security. They don't have much in pensions. They don't have much in assets, but they have a house. And for those online and in this audience who live in Dunwoody, won't find this surprising. This house is worth well over $1 million. It's a 5-bedroom house, big 5-bedroom house in Dunwoody. So to say that it's worth over $1 million is kind of, yeah, so what, Roger? That's common. Well, they don't have much basis in that house. Even stepped up basis and 2 personal exemptions for under the code section are not going to eliminate the total tax on that. And if she waits a couple of years to sell it, she's going to have another problem. It's going to keep on going back in you. So she decides, well, that was my marital home for X years. She lives in it 5 years and then decides to sell it. There could be a sizable tax, but there are things that can be done. Within the first 2 years, I would tell her, sell it and lease it back even if you have to, if you want to stay in the home. Because selling it within 2 years claims what? The deceased husband exemption there for principal residence selling. There's a lot that can be done. So that's what we're going to try to do here. Social Security is just the first topic. And can we get the slide back up? Yeah. Okay. So notice these numbers have not changed since the middle 80s. 40 plus years ago. So was $25,000 a lot? 40 years ago? Yeah. Does it protect many people from taxation of their Social Security today? No, because $25,000, even $32,000 or $34,000, excuse me, is not very much now. So a lot of people are paying taxes in 2024, a lot of people paid taxes on Social Security. I will submit that far fewer should pay taxes on Social Security in 2025. But I'm going to go even further. Way too many people will pay taxes on Social Security in 2025 than should, because they failed to do any planning. And now I'm going to put it, he just walked in, and I'm going to use my friend Rupendra as an example. Shame on you, Rupendra, if clients pay tax on Social Security in 2025 that should with a little planning. Yes, when they figured out the 88% number that wouldn't pay tax on Social Security, they assumed people would act just like they did in 2024. What if they act smarter? What if they're willing to change? But now, here's the challenge. And I know I picked on Boo because I know he's a person who is willing to change. If you're not willing to change, especially in 2025, I have one word for you: retire. Because you're proceeding on false pretenses to your clients if you don't know how the law changed. That's why, and I have to be really thanking Ben. This year's tax book solved a problem for me. The tax book that we're using this year solved the problem that the materials most people use are prepared in the spring of the year. They have meetings in May at the latest, usually in March or February, to put the book to bed. Well, in March or even May, did we know what the law was going to be? So we had to find something better. I think we did. Now there's a little problem. This book retails for well over 5 times what the books I've used in the past do. But I had a divorce attorney one time. When somebody asked him, why do divorces cost so much money? He himself was getting divorced, and he said, because they're worth it. Why does that book cost so much? Because it's worth it. Don't take it home after we give it to you and put the shelf. You're going to find it's very easy to use. It's extremely well indexed. And most importantly, it's current. CURRENT. That was my biggest focus. Current and relevant was the criteria. Ben found me this book. This book is outstanding. And now I know this is always my case. I spend a lot of time getting you ready for things. I have to do one final thing. We have 2 incredible ladies helping with these tax seminars this year. Because I retired from what I was doing and am now just doing education and consulting, I couldn't use the two people I used before because they work for somebody else. So I had to use people that I have not used previously on this seminar. I went back to a veteran and then I hired a rookie. So my veteran is Susan Phillips, who prepares all the PowerPoints, does all the square billing, etc. She and her husband run, I think it's the World Clogging Association, over 20,000 people. To say that Susan's efficient would be one of the greatest understatements of all time, wouldn't it be, Ben? I hired Susan. Ooh, I got to be careful here. I hired her when she was 19. She's a bit older than that now. It was a lot of years ago. A lot of years ago. When I wrote my books 15 years ago, I needed help. And my friend said, well, who are you going to get to help you? And I said, Susan. They said, well, it's the last time you talked to her, 10 years ago. How do you know Susan was willing to help? Because she's Susan. That's how I know. And she, then and every time we've needed her since, has been spectacular. So you can thank the PowerPoint slides, which showed innovation this year. I didn't let her do the stuff that she knows how to do, where she brings things into the screen, because I thought the audience is pretty old. They might not be able to handle things coming in and out of the screen like she can do with PowerPoints. But she's amazing, and she's done a great job. The rookie is Mary LaPlante out of Florida. She's an enrolled agent. She was a financial planner at Ernst & Young, but was right-sized a few years ago. I hate when businesses do that. If you're like I am, I hate all these businesses that will not let me talk to a person, make me do everything through some sort of voice system or computer website. But we have to change. We have to adapt with the times. So I was lucky enough, because she's a personal friend, to get Mary to work with us. I know a lot of you have talked to Mary. Boy, is she efficient. She and I are about 180 degrees opposite. I'm a big person, picture person, not so good on little details. Mary never misses a detail. So if you're going to have continuing involvement on Mary, Ben and I found Mary to be absolutely fabulous. When we do the webinars, we will need that. When Ben has me hold up that sign for those of you who are looking online, Mary's going to be the one that's going to be checking to see that you sent your name in every time you're supposed to for the online education. All right, with much more, I will start roaring through my material, but I hopefully have gotten you prepared for the nature of tax planning in 2025. Because tax planning in 2025 has the opportunity, not just because of AI, because of old-fashioned Roger, who's good at algebra. There's opportunities, as you will see in my webinars the first 4 months of the year. I'm going to take 5 each 2-hour block and show you how just really common tax circumstances can result in $10,000 or more savings. And I'm going to do even better than that. I'm going to give you a carrot here. For anybody who sends me a client who might have common circumstances wants to say, is there a way to save this person taxes? If I use the example, I'll give you $100 off next year's continuing ed. And your client will get the potential for the savings. So it's a double win. But I think that's the way I will get plenty of examples to provide in the first 4 months of the year. I don't think I would have problems coming up with them on my own. People always say to me, well, Roger, where do you get all these examples? I don't get these examples because Roger comes up with these examples. I get these examples because I have hundreds of you who give me examples, and I can use some of them, change a few of the facts, and show you how to do good tax planning. But planning for Social Security is number one. And let's go to the next slide, please, Jam. Yeah. There are 9 tax states that tax Social Security. Here's the terrible thing. The terrible thing is, do they all tax Social Security the same way? No. Unfortunately, if you work, let's say, it went away again. Yeah. If you are in Minnesota, and I try not to be political, but I think the governor of Minnesota is a flaming idiot.
That's how you really feel. That's being kind.
That is me being kind. The only reason I don't say worse than that is I don't use that kind of language. How in the world he ran for vice president, I do not know. Every time he talks, I think, and Minnesota is dear to my heart. I grew up in Nebraska. A lot of my friends moved or lived in Minnesota. But Minnesota is the biggest tax mess, one of the biggest tax messes in the country. Minnesota historically has been one of the most liberal states in the country, which means they've not been very tax friendly. I am absolutely shocked not to see Wisconsin on that, because I have to keep it light, I have to tell some stories here and there. I interviewed, when I finished my PhD at Michigan State, from Michigan State, I interviewed at the University of Wisconsin in Madison in February. It was 23 degrees below zero, and it had been for days. They were driving Army trucks across the lake. I don't know about you, but I don't want to be in an Army truck that's going across a Great Lake. They were not worried. It was frozen so solid that the truck wouldn't fall through. But here's the funky thing about the story. Some of the young faculty took me to lunch. At lunch, we're eating our ham sandwich or whatever, and they announced an amateur strip contest. The young lady that was sitting at the table next to us got up, went up to the stage, took all of her clothes off, put her clothes back on, and came back down and sat next to us. I wasn't used to that. There was also, in Madison, Wisconsin at the time, they had the mayor who had been elected mayor at age 21. Now, he was not still age 21. He served as mayor for a while, came back. He was about 35 when I was interviewing there. But he was back as mayor. So Berkeley, California and Madison, Wisconsin have the reputation to be the two most liberal colleges in the country. Although I don't know, maybe even Harvard's in that category now. So, what's the point of my story? There are 9 states now that tax Social Security, and they all have different rules. So you have to look at that. You'll also look at that and see with very few exceptions, how many southern states do you see there? What would be the most southern state? Probably West Virginia. There are no southern states that tax Social Security. So those of you here sitting in this room, most of you online, are going to be lucky because you're probably not going to do a return for a state that taxes Social Security, but you might. If you have a client who's moved to be near children or something, you could have someone who, to your surprise, when you put out the return, they're taxing their Social Security. So no southern states, very few Midwestern states. Minnesota, I believe, is the only Midwestern state that taxes Social Security. Some states tax Social Security. When they do, they tax it in the worst possible way, Vic. How do they tax it? Ordinary income. So, but most of them at least, Reg, follow the federal law. So if I can make federal Social Security non-taxable, chances are I can make state taxes, state Social Security non-taxable. That's a big deal. Now, good education requires, they used to say minimum you have to repeat things 3 times for people to realize it. So this will be time number 1 on Social Security that I'll say this. On January 5th, what is significant about January 5th? I believe it was the date in 2025 when the new Congress was seated. You may or may not realize this, but Congress is seated a couple weeks before we inaugurate the new president. So I believe January 5th was the date the new Congress was seated, which effectively meant it was the last day Biden could sign law. So Biden signed a tax law on Social Security on January 5th, and Jim put that back up. He signed a tax law on January 5th that did what? Anybody know? It took people who had government pensions, or in the case of the state of Georgia, this is enormously important. It took people who teach in, let's say, Gwinnett County. Do they pay into Social Security? The old timers did not. Some of them do now. But a lot of people did not because of the rules. They weren't allowed to collect their Social Security. That was a lot of money, wasn't it? I'm going to take a lady who happens to be a personal friend of mine, who is now retired. And I'm going to tell a hero story for myself. I don't talk to people on planes normally. But this was an unusual plane because when we got on it, we went nowhere for a while. We spent 2 hours waiting for the plane to take off. So even Roger talked to the person sitting next to them. And it turned out she was a very important person in the Gwinnett County school system. She was in her early 50s. Early 50s. And in the course of our conversation, I said, when do you plan to retire? And she said, well, 60 something. And I said, what if I could tell you you could retire today? She had, if she did it right, she had her 30 years in the state retirement system. So she could afford to retire, draw full 60% pension, 30% times 2%, or 30 years times 2%, from the state retirement system right then. I might have been a hero to her. You think? I allowed her to retire almost 10 years early. And the first thing the school system did was they hired her back as a consultant. And she got another really nice sum of money. Well, I called her after Biden signed this legislation in January and said, I guess I could use her first name, Lynn, do you know now she has a husband that she was married to more than 10 years who's deceased? I said, do you know that you can now draw his pension and there will be, because of Biden's bill, there will be no offset against your deceased husband's pension? But there was a catch. And this is part of why I'm so passionate about your need to not be like the 35-year-old who doesn't want to learn anything for the rest of their career. The bill that Biden signed had what year labeled on it? Remember, this is January of 2025 when he signs it. You would think it'd have 2025. At the very least, 2024, right? It did not. It was the Social Security Act of 2023. Yikes. Now let me tell you about another Social Security rule. Social Security can only pay you back pay for 6 months. What a congressional crime! They didn't put any special provision in. It's a 2023 legislation that took all the way to 2025 to get passed. So the whole year of 2024, and I don't know how much of 2023, you could get more pension, more Social Security pension. But you could only get 6 months worth of it. So what if, you've heard of buyer beware? Taxpayer beware. What if you don't know about it? We have people, probably more than half of them, way more than half of them, who still don't know that they can draw off a deceased spouse, or they can draw off of some of their own earnings after they were no longer working for Gwinnett County. And probably at least 80% of the counties around Metro Atlanta did not pay into Social Security for a long period of time. There are a lot of people affected by this, Reg, and nobody knows about it. Now, I have a lady, friend of mine, her name is Cindy, who's spoken to this group a time or two. I called Cindy and I said, Cindy, what are we doing to educate all those people who work for Gwinnett County or all the other counties around Atlanta that don't pay into Social Security or didn't pay into Social Security. A lot of them have changed. What are we doing to educate those people? And she said, well, they've hired me as a consultant, but I'm pretty much retired. So the bottom line is nothing or virtually nothing is being done to protect those people who are not getting as much Social Security as they're entitled. And that is, I consider that criminal. That you have to be aware to enforce your rights. But if you have people who are not drawing Social Security but are of the right age, 60 or more, and either they or their spouse has paid into Social Security, they need to be aware of it. Now, it doesn't affect spouses who didn't work in a system that failed to pay in, because they get theirs. But the law also affects people who are drawing government pensions. It's big, big impact. And unfortunately, virtually nobody knows about it. It's the classic, you got to know the law to take advantage of the law. So I'm with Judge Learned Hand, who was not a Supreme Court justice. Most people think he was. I thought he was until a couple days ago. Ben thought he was as of this morning. He was a circuit court judge. Now, if you're like I am, and of conservative persuasion, I'll say it that way, you're not real fond of circuits right now, because they've issued some of the wackiest pronouncements I've ever seen. But Judge Learned Hand is not of this century. He isn't even of the last century, I don't think. Judge Learned Hand was in the 1800s. But his wisdom, I think, is good. You don't have an obligation, no patriotic duty to pay taxes that you're not required to pay. Now, unfortunately, a lot of times you might have to do some planning to not be required. Okay, back to the screen, Jam. Let's go to the next slide. Oh, and I did want to mention one other thing on that slide. Notice there's 3 states that are probably the highest individual state taxes: New York, New Jersey, California. None of the 3 taxes Social Security. When I saw that, I was shocked. And I work in these areas a lot. But I'm so used to that ridiculous California tax. I think New Jersey's even higher than New York. But on California, a capital gain can get taxed. Take a guess on how high. Anybody know? 13.3%. But they're not content. They want to raise it to 15.3% tax on capital gains. So could it possibly be worth doing some tax planning? Obviously it could. Okay, Jim. All right, now let's look at the second category. No tax on capital gains. These are the rules in 2025. For a single taxpayer, capital gains up to $48,350 of income, taxable income, are taxed at a 0% bracket. So what can we do to save tax on capital gains? What if we reduce the tax on Social Security? Does reducing the tax on Social Security help with capital gains? Of course it does. Because remember, capital gains is part of the taxable income, but so is Social Security. So if there's no tax on Social Security, that makes the chances of paying no tax on capital gain greater. I'm going to claim, not that I have anywhere near his talent, to be perhaps a David Copperfield of tax. Magic. If we eliminate the tax on Social Security, we're probably eliminating tax on capital gains at the same time. I'm going to even make this claim, hold me to this claim, that I could do charitable giving and get way over 100% return immediately. If that charitable giving does what? Eliminates the tax on Social Security and eliminates the tax on capital gains. And I'm even going to show you a technique that has a triple whammy on charitable giving. This is important because the charities say, what happens when people retire? They don't feel like they can afford to give to charity, do they, Rich? So if they don't feel like they can afford to give to Social Security, they need the cash flow. But Bobby, what if I could show you that by giving money, by giving $1, you get back $1.40? But you should now be starting to see that that's possible. That's definitely possible. If you eliminate Social Security tax, eliminate capital gains tax, it also should whet your appetite. I bet at least 80% of you in the room and listening think reverse mortgages are something I'd never want to touch. I'm going to show you between now and April that not only reverse mortgages is something you should consider, but that Dan Holquist is one of the most brilliant men in the country, the guru of reverse mortgages. Because a reverse mortgage has the potential to replace the cash flow that will result in zero tax on Social Security, zero tax on capital gain, and even zero tax on ordinary income. You could be a 0% taxpayer and have cash flow that not only doesn't cost you anything, but makes you something. If you can take $40,000 out of your reverse mortgage and use it to save more than $40,000, then it costs you nothing, right? And it's possible. That's why there are 6 strategies here. Because eventually we're going to combine those 6 strategies, and Roger's got limited cognitive ability. I have limited cognitive ability. That's why, Ben, I say if we can identify the cases we want to put into AI's potential to be a tool. I mean, after all, when you're my age, when I was in college, my dad paid for everything, pretty much. But I had a requirement. During tax season, I had to go home on the weekends from Lincoln to my hometown of Grand Island, 100 miles, roughly. and help with tax returns. And in those days, how did we do them? By hand. Many of you would retire in a heartbeat if you had to do tax returns by hand the way my father did. And he did till his death. Now, my mother helped him. She was not a tax professional, but she helped him for so many years that when he was no longer cognitively able to do them, she took them over. And naive Roger thought, my mom, by looking at their tax return, I can save her money. Boy, was I wrong. My mother was better than 99% of the taxpayers out there, professionals out there. She knew every trick in the world to save taxes, and she used them because she had time. She was retired. She did taxes up until about 3 years before her death, which would have been about age 94, that she still did taxes. And when I looked at her return, I couldn't save her $100. And there was a lot of income on there because my parents were good savers. I couldn't save her $100. Boy, did that deflate my ego. And she did them by hand. She didn't use a computer, Reg.
That's impossible.
She played bridge 4 days before her death of a heart attack at age 97. And she probably won. So the opportunity is great, and I hope I'm convincing you of that. Now look at married filing joint. Married filing joint can have $96,700 of taxable income and do what, Reg? Pay zero tax on a capital gain. Most of our older taxpayers, where is most of their income coming from? There are some that have a lot in pensions, but there's probably even more. It's capital gain. So this kind of leads me into another subject that's one of my 6. Could I figure out the Goldilocks amount of capital gain to put into an opportunity zone? Leave some to be taxable because it'll be in a 0% bracket? Yeah. I hope you're starting to see why I think AI has enormous potential for tax planning. Now, that doesn't mean, Sharon, that they're still going to need you. They're going to need you to do a different thing, to say, this is one that we need to look at. Here are the key variables that make this one that we need to look at. Well, that's what I'm trying to do in the first 6 hours here. And what time is it?
It's time for break.
Okay, we'll take a break.